And still talking about the impact of electioneering on the economy, we have Omoshui Temi-Tokpa, Investment Strategy Manager at AfriInvest Asset Management, join us this morning. Great to have you on the show.
Thank you, Ladi, for having me.
So it's very obvious that we're getting closer to the climax of politics in the country with the conclusion of party primaries. The first half of the year was largely, inundated with political activities, from the core discussion on social media platforms to topmost concerns of investors about, the Nigerian economy. But the trajectory is likely to remain, since this the second half of the year. Generally, do you think Nigerians and macroeconomic indicators are reacting differently from previous pre-election years?
All right, thank you once again for having me. I think it's actually a very good discussion that we have to bring to the table what is happening in terms of macroeconomic reactions to, what's happened although, we are just at the year. So a number of factors have actually reacted. In fact, Nigerians are reacting significantly, plus macroeconomic indicators. In fact, Nigerians' reaction to the current, political atmosphere is largely hinged on, the deteriorating macroeconomic condition. And, these are quite obvious, what we are seeing around. For instance, you see that what happened recently when some youths, went to TBS, we had massive youth that wanted to get their PVC because most people are now politically conscious. And thanks to telecommunication, because before now, we couldn't see most of what is happening in terms of politics and in terms of information. But in fact, if a friend of mine told me that he had to follow, the primary elections of all these the top parties because it was aggressively discussed and clearly, discussed on social media. That had created a kind of awareness. And if you look at it from the angle of social media, that has actually helped to make more Nigeria more conscious of political activities. So I think that has helped a great deal, and people are actually reacting differently. And if you go by numbers, right, in 2018, right, we had, in terms of internet subscriber, we had just about 100 million people. But currently, internet subscriber in Nigeria are more than 147. And if you look at social media usage as well, from about 80 million in 2018, we have over 32 million right now. So those are quite important in Nigeria political landscape. And I think it's actually shaping a lot. And there has been a lot of talk around the fact that even if you are agitative on social media that you want good governance or you want this candidate to be voted in, and if you don't get your PVC, because elections are not conducted on social media, elections are not, votes cannot be, you cannot cast your votes on social media platform. I think all of those, talks have actually, affected how people see political activities. But I think what is even more important are two factors that one of them I've mentioned earlier, which has to do with the deteriorating macro condition. And the second has to do with the clamor for a bit of slowdown on the kind of gerontocracy that we have in Nigeria, in terms of the caliber of people. Gerontocracy has to do with having old people ruling set of people, that the average age, in fact, life expectancy rate in Nigeria is about 55 years, and you have a number of our leaders above, 55, some 70, and all of that. So I think the clamor for that has actually made people more politically conscious. And when you look at macro indicators, gone are the days when Nigerians are not concerned about macro indicators. What has happened, for instance, I could pick inflation. Before 2015, average inflation rate in terms of 10 years before 2015, right, or into 2015, it was just 10.7%. But if you pick from the most recent number, the 16.4, if you pick it 10 years till now, the average has moved up to 12.7%. Inflation has increased significantly. And when you look at exchange rate as well, is currently at the highest level ever. So all of this, are actually affecting people, and we are now becoming very conscious of political happenings. And if you look at unemployment number as well, the most recent number that we saw in 2020, unemployment rate is about 33%. compared to what we saw, before 2015, the unemployment was barely above 10%. So these are concerns, and and I think it's even more interesting now than ever because technology has also helped people to understand what macro indicator means, how they can also affect their life. For instance, you see around that there are visualizations on inflation, visualization on government debt stock, visualization on what government used to service, debt in terms of the portion of revenue that goes into debt. So most Nigerians are now, aware of what is happening and the level of the deteriorating macro condition. I think
Right.
importantly, I should also mention what has happened to capital importation. It's quite clear that capital importation, foreign investors are also reacting to the current macro condition. At the last report, foreign capital importation was about 1.6 billion. That is significantly low. And if you extrapolate, you see that there's no respect inside. So it's quite clear that Nigerians are reacting to what
Right.
is happening. They reacted in first half of the year, and the reaction will continue going forward.
And Temitope, quite, a number of headwinds, we're struggling with economically, at this point. But how much of a weight will this be on the next president?
So I think it's a whole lot of work because factors or drivers of Nigeria economy, right? They are quite complex. The deterioration we have seen so far, so it's a whole lot of. For instance, if you look at government fiscal condition in terms of debt service to revenue ratio, right, is well over 80%. And if you look at debt stock to GDP ratio that helps to measure solvency, is inching towards the threshold of IMF of 55%. Currently, we are still between 35-40%. So it's inching towards that, which means there's a lot of, a lot of concern and a lot of work for the next president. And in terms of infrastructure, insecurity, attitude, in fact, what is even affecting Nigeria beyond these quantitative factors, we also have qualitative factors, which include our culture, attitude, towards things, in terms of if we believe that the country will change, if we trust our leaders, because trust, you cannot find a nation that can grow sustainably without trust. So I think the first port of call for the next president will be to build trust, to tell for Nigeria to believe that when my president says this, I should believe it, because if there are no trust, no matter how beautiful or laudable the policy and programs are, Nigerians will take it with a grain of salt. So I think from trust to infrastructural challenge and other in terms of even international relations and even including youth into the system. So I think it's a whole lot of work,
Quite a lot
but
of
they are
work.
not they are not head shaking. I think they are surmountable actually.
Surmountable. Quite interesting. But we've seen some volatility in Nigeria's financial market, especially the positive momentum in the stock market. Is this market now immune to the uncertainties that normally come with pre-election years?
Well, I think in a way, going by the numbers, it's quite clear that the market seems to be immune to what we are seeing in the domestic market or the macroeconomic condition due to about three factors I'll mention. One of it has to do with the change in the structure of the markets. Two, has to do with factors that are driving individual stocks. And the third point has to do with the bandwagon effect. So I'll start with the structure of the market. You will observe that this year alone, the structure of the market has shifted from more of domestic players than foreign investors. Last year we saw about 72% in terms of foreign investors participation in the market compared to domestic investors. And this year, in fact, in April, it was about 82% domestic investors compared to foreign investors, even though it has average year-to-date performance in terms of domestic investors' participation in the equities market is about 82%, right? But the structure of the market is shifting drastically. And, in foreign investors are concerned about macro condition, and they have continued to shift away from the Nigerian market since 2019. So that's why it seems that the market is not responding to the worsening macro condition. And again, what is happening in the US. Look at the S&P, Nasdaq, Dow Jones Industrial Average. So a number of Nigerians that like foreign stocks, they might not want to go that route anymore for now because stock prices are going down and interest rates is, it has been going up in the US. And if you listen to the Fed, it seems there's no respite in sight in terms of increase in policy rates. So because the structure of the market is changing, I think that has a role to play. And in terms of the structure of the market, again, it's also very important that I mention the top stocks. The top stocks in the market in terms of capitalization, you have Airtel, MTN, Dangote Cement. So these three companies alone account for 56% of the capitalization as at Friday. So it just tells you that whatever is happening in the market may not be a true reflection of the general market performance, because we have over 150 listed stocks on the Nigeria Stock Exchange, but just three stocks already account for 56%. So if you see significant gains in these stocks, it will tell you that the market is gaining, and it may be possible that others are not performing well, or they are just somewhat lackluster. For instance, so far this year, Airtel has done about over 80%. MTN has gone up by about 20%. Dangote Cement has gone up by about 7%. And we also have, so those are the structural factors. So when it comes to individual stocks, some factors are affecting individual stocks. One of them is the commodity space. If you look at Opomo Oil, Presco, they've gone up by over 50, 80% so far this year, and it's on the back of what happened in Indonesia when the government banned the export of palm oil. So that has continued to put pressure on on oil prices. And in fact, over 20 countries have placed one ban on the other on commodity exports. So that is affecting the commodity space, and because consumer or investors are expecting that increase in price will also affect revenue. They know that yes, it will affect revenue, so they are positioning in that stock. And if you also look at the oil sector stocks as well, Seplat, Seplat, in fact, the price is almost double so far this year because of the spike in oil prices. We are currently seeing Brent sitting above $100 per barrel comfortably now. So, and that was not that was not envisaged last year. So that is affecting the oil and gas or oil sector stocks. And when you look at the telecommunication sector, because of a level of progress, that has been made in terms of the PSB license of Airtel and MTN, that has, continued to put some form of interest in those stocks. And this year, the performance of those stocks are quite impressive. So when you look at these individual stocks, they are not really responding to macro condition because of their unique characteristics, because of factors that are affecting them individually. The last point has to do with the bandwagon effect, because these stocks are gaining, people are also looking at buying other stocks so as to benefit from the market rally.
Right. Well, that's also another huge impact there, the bandwagon, effect. And we've seen how, global markets are really down, at this point. Even in the crypto market, we see Bitcoin down a massive 12% this morning. So those markets are not looking attractive right now. But, let's look at the economic agenda of the major presidential aspirants. For instance, former Vice President Atiku Abubakar promised to allow, the private sector to thrive by breaking the monopoly of important sectors such as refineries, power, and rails, while the national leader of the APC and presidential candidate Bola Tinubu wants to create a new agricultural policy, intends to grow the economy by about 12% in the next 4 years. Do you think these agendas are realistic, in the light of the current global and domestic microeconomic conditions?
All right, thank you for that question. Well, I would say that, in terms of their agendas, right, is we know that we've seen series of something similar to these agendas in the past from the ERGP and all of that. So I think what is even more important has to do with the trust, right? Because if you ask an average Nigerian about the problems in Nigeria, they will tell you clearly, everybody knows the problem: infrastructure, insecurity, policy stability, ease of doing business. So all of these factors, they have to be considered. But I think the only interesting part about what the two contenders have laid on the table is that they will be pro-market, they will be pro-growth, and they'll be private sector friendly. I think that is a convergence in that regard, and it's quite applaudable. But on the 12% growth, it seems overly optimistic, and I think my concern is that it's not broken down to facts and figures, looking at the component of GDP and looking at specific action plans to achieving this amidst the global outlook that economy recession is in the offing. Europe, they're looking at economy recession in the offing. The US is looking at a level of stagflation. So I think the 12% may look overly optimistic. I just want to believe that maybe the aspirant is setting a standard so that even if it's not achieved, but will set something quite high and see a way to hit it. But I think by and large, the most interesting part is the fact that these contenders are both market friendly and they are pro growth.
Okay. All right, Moshe, you talk about investment strategy. So much to unpack there, but we'll keep tracking to see how all of this plays out. The investment strategy manager at AfriInvest Asset Management. It was great having you on the show this morning.
Thank you for having me, Lally.
Thank you. So after the break, we'll look at Nigeria's real estate sector Q1 2022 performance. And as investors search for that sweet hedge against inflation, does real estate have a hedging ability? We'll have that conversation next. Do stay with us. This is Business Morning.